From the world of politics.
There is going to be a negotiated result to this conflict. Russia is not going to roll over Ukraine. That's almost certain.
To the world of business.
10% doesn't run a company. It's the power of his argument that's going to be more important than his actual vote.
This is Balance of Power with David Westin.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, the outrage continues around the world to that evidence of alleged atrocities committed by Russian troops north of Kyiv over in Ukraine. And as a result, we have yet further sanctions being imposed, both by the United States and by Europe. To bring us up to speed on it all, we turn out our Washington correspondent, Anne-Marie Hordern at the White House. So, Anne-Marie, start with the U.S. first. What are we doing in the U.S.?
So the United States, what we learned is they're going after the same kind of entities they have in the past. So similar strategy, but some new targets. So really going on full blocking sanctions on Sberbank, which is Russia's biggest bank, as well as Alfa Bank. But David, we should note, similar to the past, they are making in these full blocking sanctions carve-outs for the energy sector. And then when it comes to individuals close to President Putin, the United States is going to be sanctioning his two adult children. That would be Katerina and Maria, the two adult children that we know of. But we should know President Putin has gone to great lengths over the years to really guard them in a lot of secrecy. And then on top of that, there'll be an executive order on a ban of new investment going into Russia. So you could see there's still financial and economic penalties they are putting at the feet of the Kremlin.
Emery, you mentioned energy there. What about with Europe? Because we had some new news out of Europe. What about coal? What about oil? What about gas?
So when it comes to coal, the Europe plans are to go there to block coal and imports of Russian coal. Now, we should note, David, that on the one hand, this does put a crack in the ceiling of the energy realm that for many said it would be very hard for Russia to do. But Ursula von der Leyen outlined how much Russia makes off of European coal, sending that there. It's about $4 billion. This year alone, our calculation is Russia will bring in more than $320 billion, a third more of what they brought in last year when it comes to commodity sales. So then the big question is, will Europe ever move to block Russian oil and gas? You have two trains of thoughts even coming out. We heard them today. Charles Michel says at some point, sooner or later, oil and even gas will have to be on the table. But then you have the likes of Viktor Orban saying Hungary will never go there, and they're even willing to pay in rubles.
Yeah, exactly. I noticed that. That's quite a piece of news there, the possibility. Thank you so much to our Washington correspondent, Anne-Marie Hordern, reporting from the White House. We want to continue on that subject of energy and its role with respect to all of these sanctions being imposed. And for that, we turn to really a true expert in the area. He's Dan Yergin, Vice Chairman of S&P Global and the author of The New Map, Energy, Climate, and the Clash of Nations. Dan, great to have you back with us. Let's pick up on what Anne-Marie was just talking about. First of all, with respect to coal, I guess I'm a little surprised it's that big a number coming out of Russia. But give us a sense, can Europe replace that coal from other places? And by the way, what's going on with the market for coal? As I understand, there's actually increased demand for coal these days.
Yeah, demand for coal has been going up, and coal markets are tight, which is why actually the energy crisis that preceded Ukraine began with shortages of coal. But Russia is the biggest supplier of coal to Europe, but that's probably the easiest thing to stop and to pull in from other places.
So, Dan, what about the oil and gas side of it? As I understand, that's much harder potentially for Europe to substitute oil and gas from other sources. What are the prospects for that over the next year to 18 months?
David, as you said, it is much harder. And that's why oil and gas and energy was really carved out of the sanctions initially. But what started to happen is you've had self-sanctioning. And we think out of the maybe 4 million barrels a day of oil and product that gets exported to Europe, about half of that has been self-sanctioned, disrupted in some way. The million barrels a day from the U.S. Strategic Petroleum Reserves helps balance some of that out. But I think the pressure is going to grow on oil, although, as you said, Orban will oppose it. But I think given what's happening, the toughest one to deal with is natural gas, because there's just not that much, although U.S. LNG has been a very welcome addition to European energy supplies.
We're all concerned about what this does to Europe and its ability to get access to energy. What does it do to Russia and its position as really a dominant supplier of energy over the years?
Well, Russia has been, although Putin once said he didn't like the term an energy superpower, he liked the money and he liked the political clout that comes from it. I think that days are ending as an energy superpower because the Europeans have basically said we're done. We don't regard Russia anymore as a reliable supplier. Their oil and gas is unwanted. It's going to take time to unwind that. So Russia will continue to be a major producer, but it will be a reduced energy power. And right now it's making a lot of money because prices are high, but its market for European gas over the next couple of years is really going to shrink.
Is the natural gas situation, I'm getting a question right now as we talk from a viewer, is it very different from natural gas? Because there is no strategic petroleum reserve for natural gas.
Right, exactly. And reserves are gas. The sort of storage is low, and their problem is to build it up for next year. So that's why gas is the biggest problem. And that if you start to have it disrupted, either because people don't want to buy it, or Putin says you have to pay in rubles, and the West Europe's not going to pay him in rubles, then you're going to see industry shutting down. You'll see prices going up. And we were just looking at that this morning. And what it also does is it means that the macroeconomic forecast will have to be lowered because economic activity will be lower. So Putin knows that he has leverage, but it is declining leverage over time. And obviously, his assumption that the Europeans would just salute a conquest of Ukraine has just turned out to be completely wrong, because he thought they would do that because of their dependence on Russian energy. Right now, they want to get out of Russian energy as quickly as they can. As you say, gas is the biggest problem. Oil is a problem, but gas is bigger.
Well, speaking of oil and gas, but really oil, it's on the agenda on Capitol Hill, as you know well, Dan, today, with those oil executives being summoned in, sort of almost to the principal's office, and asked to respond to the profits they're making, because they all are making lots of profits. What about this move to perhaps tax windfall profits? Once again, we've heard this before.
Yes, well, we've been there before. What they seem to have forgotten is that you had two price collapses, and the industry really retrenched, laid off a lot of people. Right now, it's making money. It's a cyclical industry. But this is, obviously the Congress people have to respond to their constituents. High gasoline prices are hurting people, but this is the result of basically more than anything else, Putin and what's happening there. But this is a ritual of American politics. Big oil. This morning, I was looking back in the pages of the prize and found that the first hearing on high gasoline prices was 99 years ago in the Senate, and prices went up, and then guess what? They went down. But the script is very familiar.
So, Dan, we always want to ask you, what are your projections at this point for the price of oil going through the rest of the year? At one point, you said you think it's at 120. Do you think we're headed there again?
Well, I think, there's always the question, what's going to be the wild card here? Is COVID in China going to really sort of slow down that economy and reduce demand, which would actually take the pressure off the price? But if not, I think we are going to be in a tight oil market, and particularly in a disrupted oil market, which is what makes it more imperative not to have this political antagonism that we have in this country, but we need a kind of close collaboration and cooperation between government and industry, as we've had in previous oil crises going back to 1956 and the Suez Crisis, even to World War II. This crisis could turn into an emergency. Therefore, managing together on a daily basis is what's going to be really needed to manage the logistics of supply around the world as this continues.
How bad is it? I mean, we've been through some energy crises before. Certainly, you and I both remember the 1970s. How does it compare?
Obviously, the one people go back to is the 1970s as the most severe. I think this potentially is worse because it involves not only oil, but it involves natural gas, involves coal, and it involves two countries that happen to be the nuclear superpowers. So the risks are as high as they seemed in the 1970s. The risks right now are higher.
Okay, Dan, it's always such a pleasure to have you with us. That's Dan Yergin of S&P Global. Coming up here, Fed Minutes out in less than 2 hours from right now. We're going to go over what to expect with Sarah House. She's senior economist from Wells Fargo. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We want to keep you up to date with news from all around the world. And for that, we go to The First Word with Mark Crumpton.
David, thank you. The U.S. Justice Department is charging a Russian businessman with allegedly violating sanctions against the country. At a news conference today, U.S. Attorney General Merrick Garland had this message for anyone else who is enabling Vladimir Putin's regime.
It does not matter how far you sail your yacht. It does not matter how well you conceal your assets. It does not matter how cleverly you write your malware or hide your online activity. The Justice Department will use every available tool to find you, disrupt your plots, and hold you accountable.
Attorney General Garland added the United States had seized millions of dollars from an account traced to the Russian tycoon and disrupted a cybercrime operation run by Russia. The U.S. will impose new sanctions on Russia, including penalties on two of its largest banks and on President Putin's adult children. Russian Foreign Minister Sergei Lavrov's wife and daughter will also be sanctioned. It's the latest step in efforts by the U.S. and its allies to crack down on people close to the Russian leader over allegations of atrocities in Ukraine by Russian forces. Russia denies the accusations. A panel of COVID experts is meeting today to discuss how and when to update vaccines for future variants. Until now, the process has been driven by vaccine makers Pfizer and Moderna. This meeting of Food and Drug Administration advisors should offer the first hints of a strategy for developing strain-specific boosters, and it probably won't be the last. Many scientists think the vaccines will need to be updated periodically, much like the flu shot. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so very much, Mark. Well, the big news, of course, in the markets this week so far has been the bond market, where whatever the bond rally was, it's gone away at the moment, in part in anticipation of what the Fed is likely to do with rates, but also with the balance sheet. To give us a sense of the upcoming FOMC minutes that we're going to have just a short time from now, we welcome now Sarah House. She's senior economist at Wells Fargo. Sarah, thank you so much for being with us. Let's start with those minutes. People, I think, are really fixated on the balance sheet, and we did hear from Lael Brainerd from the Fed just yesterday suggesting they may be really running off that balance sheet faster than we thought.
Right. So we saw with the January meeting, the Fed lay out the principles of balance sheet reduction, talking about how the Fed funds rate is still going to be the primary tool. The balance sheet's going to shrink in a predictable manner. And eventually they want to get that composition to primarily be treasuries. But we're really missing some of the details around what that shrinkage might look like. And we saw Powell hint that those details could come with the meeting minutes from March. And we saw that reinforced by Brainerd.
So give us some sense as an economist of the relative effects on the economy, on financial conditions for that matter, of the runoff of the balance sheet on the one hand and raising rates on the other.
Well, I think the Fed has a better grasp on the impact of the Fed funds rate on financial conditions versus the balance sheet. But I think they're looking at financial conditions as a whole. So obviously, given the balance sheet of roughly $9 trillion, that's still very supportive of overall financial conditions. And because of the overall strength of the U.S. economy right now, and just that sheer size of the balance sheet, they're really pointing towards shrinking it much faster than what we saw over the last cycle. So, for example, our expectations heading into the minutes are that eventually we'll see caps of up to $100 billion between treasuries and MBS, which is about twice as much as what the caps were in the last cycle, but also the phase-in be faster. So right now we're penciling in 6 months versus 12 months, but I think we'll get more clarity coming out of that in the minutes of just how much faster that roll-off will be.
Sarah, as you look at that roll-off, what sort of analysis do you have around the way they roll it off? Because you mentioned they have treasuries and they have the mortgage-backed securities, the MBS, so to speak. It may be quite different, right, if they really want to come out fast, because one could disrupt the mortgage market in a way that I think they have a fair amount of flexibility in just letting the treasuries mature.
Right. So, of course, the MBS roll-off is very, very dependent on how fast those mortgages are paid back. And so seems that there's a lot more appetite for eventually selling mortgage-backed securities from the portfolio. Now, they're not going to get to that straight away. I think they will let that start to just roll off, particularly as those caps get phased in, but it does stand to be slightly different in terms of that composition, where I think they are more eager to shrink that MBS side of the portfolio more so than Treasuries compared to the 2017-2019 runoff period.
So, Sarah, give us your take on the yield curve right now. There's an awful lot of discussion of the yield curve. It inverted there on Friday when we get to the news out of jobs. Where is the yield curve right now, and how good an indicator do you think that is of a possible recession?
Right. So, of course, it depends what part of the yield curve you're looking at. So we've seen the 2s, 10s move back positive, essentially uninvert from what we saw last week. But I think overall, when we step back and we look at the signal coming from the yield curve, it's not as good as it was historically, in part because those Fed purchases had such a big effect on yield. So the yield curve has become unduly flat because of those purchases. And so we're not getting the same signal as far as a recession from it than we have prior to QE.
Sarah, economists like you are quick to say yield curve's relevant. It's one point of data we should take a look at, but it's not the only one. As you look at all the data, what are your projections right now about a recession? We had Deutsche Bank come out today, I'm sure you know, and saying they think that we'll have a recession in the United States by the end of next year, 2023.
So we think the recession risks are more elevated in the current period than they are in the typical part of an expansion. So we estimate the chance of the economy slipping into recession between now and the end of 2023 at roughly 30%. But I think it's important to not just think of a recession in terms of binary terms, but also what happens to growth overall. So we're looking for a significant slowdown in growth. So not necessarily a recession, but still notable weakening in activity that could be painful for a lot of businesses, even if we don't slip into a technical recession.
Yeah, a really good point. Short of recession, you can still have a lot of pain in the economy. But taking the flip side of that as well, not all recessions are created equal. There are some that are deeper and longer, some that are shallower and don't last quite as long. What, if any, can the Fed be doing right now to try to get the latter kind, that is a shallow, quick recession?
Well, I think there are some positives heading into this period of tightening, and a lot of that comes down to the strength of corporate and household balance sheets. And so I think that does give some wherewithal to withstand somewhat higher rates. But while we're starting at a good place, of course, that position is going to deteriorate the higher rates go. So already we're seeing the income dynamics in the household sector weakening. We've seen real income decline for 7 straight months, and so it's certainly not an easy position for the Fed. And I think a lot of things have to go right for them to wring out inflation without tipping the economy into recession. So we need to see things like the mix of spending be better balanced, where it's tampering down things like goods inflation without completely crimping consumer spending. We need to see workers come back into the labor force to help keep labor income rising, but maybe take some of those wage pressures off that are contributing to inflation right now.
I wanted to ask you about the workers specifically because, as you say, we need to wring the inflation out of the economy. I wonder what kind of pain we have to endure to do that. We had Bill Dudley, the former New York Fed president, earlier today on Bloomberg saying, look, we need some pain in the equities, essentially. We have to see this come down more in asset classes. What about unemployment? Can we wring out the inflation without increasing unemployment?
Well, that's going to be a really tough thing to do if we're actually trying to essentially get resources growing faster than demand. That includes labor supply. So it's going to be a tricky line to walk. I think there is scope for the labor force participation to improve further. And so that can help tamp down unit labor costs. So that's essentially the inflationary component coming from the labor market. But I think the fact that the Fed's projections are essentially still showing growth above potential, no real pain in the labor market, still looks pretty rosy in my view.
Okay, Sarah, always a pleasure to have you with us. Thank you very much for your time. That's Sarah House of Wells Fargo. Still to come, Senator Rick Scott of Florida on Ukraine and his state's battle with Disney. This is Balance of Power on Bloomberg Television and Radio.
war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We're going to check on the markets now, which are moving, particularly the equities, because in part, I think, of what's going on with the bond market. And we have Kriti Gupta here to take us through exactly what the markets are doing. So help us.
Yeah, it's a risk-off day regardless of what asset class you look like. Bonds are selling off, the stock market's selling off, but really you nailed it. It really is all about what's happening in the bond dynamic right now. And it's coming down to a lot of pressure ahead of these FOMC minutes that you just discussed with your previous guest at, I believe, 2 o'clock. The big focus right now is going to be not just about rate hikes, but about the balance sheet. It comes down to how much of shrinkage in the balance sheet actually translates to an additional, essentially, 25 basis point cut in terms of the impact that it actually has, in addition to potentially putting 50 basis points on the table. So it's that discussion and the lack of clarity around how that shrinkage actually happens that's really spooking the bond market and, in turn, spooking the stock market. You have the NASDAQ down a whopping 2.7%. And remember, when yields jump by this much as 17 basis points yesterday, as much as 10 basis points earlier in the session today, that margin of the move is really what knocks tech off of its game, as opposed to just 3 or 4 basis points. So
you make a really important point, I think, which is we think that the Fed knows what it's doing when raising rates. It's not as clear on the balance sheet. We don't have as much experience with that.
Right, because there's 2 ways that can happen, right? You can very clearly just not reinvest the funds that come on to your balance sheet, or you can actively sell bonds on the open market. And that's really what's kind of freaking the markets out right now, because in some ways, the markets are encouraging the Fed to make the asset prices come back down to earth. And to do that, it means you are able to potentially justify a more violent, for lack of a better term, shrinkage of the balance sheet, which would include selling bonds on the open market. In
the meantime, we have a fair amount of news on oil today. We had inventories, and of course, we have that testimony going on on Capitol Hill.
The testimony getting a lot of attention because we know this is a very sore topic when it comes to the debate about whether or not oil companies are, as the Biden administration puts it, racketeering profits and really holding on to them and not able to serve the consumer. But a lot of what the testimony has, and I'll share a little nugget with you here, is some of these major oil executives, what they're saying is, yeah, we are making record profits in 2021, but they are following some pretty big declines in 2020, which comes back to the core of the issue. Darren Woods, the CEO of ExxonMobil, he came out and said, yeah, we made $23 billion in 2021, but we lost $22 billion in 2020. So the core of the issue here really comes down to they're still ramping up from these COVID issues. And on top of that, they're trying to meet this demand. It also takes 12 to 18 months to invest and to ramp up production. So do you make that investment right now?
Yeah, and this is far from the first time that we've seen Congress go after oil companies. Thank you so much to Kriti Gupta. Coming up, we're going to talk with Senator Rick Scott about what's next for Ukraine, the direction of his Republican Party, and his state's fight with Disney. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. To catch you up on news from all around the world, we're going to go now to Mark Crumpton with the first word.
David, thank you. Ukrainian President Volodymyr Zelensky says Russia hasn't given up its plans to occupy the entire country. President Zelensky addressed the Irish Parliament today as some Russian troops pulled back from near Kyiv to focus on eastern Ukraine. Zelensky told the lawmakers that 10 million Ukrainians have been left without shelter as a result of the war. In Peru, President Pedro Castillo lifted a lockdown that he had imposed on Lima in an attempt to curb violent protests against soaring inflation. Many congressional leaders in Peru had urged the president to lift the lockdown, saying the measure restricted fundamental rights. Even as he met with lawmakers, a protest rally near Congress turned violent, with demonstrators battling police who fought back with tear gas. Emmanuel Macron is spending the final week before France's presidential election trying to connect with voters through enough campaign stops and media appearances. Polls show the gap between him and far-right leader Marine Le Pen narrowing. President Macron has been criticized for not campaigning enough. The latest surveys show Macron would beat Le Pen by 53% to 47% in a runoff. That gap, based on an average compiled by Bloomberg, has more than halved from a month ago. Some Republican governors in the United States may be getting a midterm campaign boost from the same Biden administration aid they attacked just a year ago. Governors from both sides of the aisle are tapping into $200 billion in pandemic relief from President Biden's American Rescue Plan. Florida's Ron DeSantis, considered a leading 2024 presidential candidate, has repeatedly called it Washington at its worst. But his administration alone has doled out more than $5 billion of that money so far. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
All eyes continue to fasten on Ukraine as the atrocities are documented north of Kyiv. And we know how the Ukrainian people are doing. They're going through a horrible situation, although, in fairness, they are doing much better than people would have expected at this point. So we want to ask now how we're doing in supporting them. And for that, we turn to Senator Rick Scott. He's a Republican of Florida and a member of the Senate Armed Services Committee. So, Senator, thank you so much for being back with us. How are we, and by we I mean the United States and our allies, how are we doing in supporting the Ukrainians?
Sure. I think the one thing that's really important is we all need to make sure we're all calling Putin what he is. He's a war criminal. He needs to be in prison the rest of his life. And we've got to do everything we can to hold Russia accountable through sanctions of Putin and anybody around him to make sure that he's held accountable. On our side, what we've got to do ourselves and our allies, we've got to keep showing up and give Ukraine every lethal weapon we can to make sure they can defeat, not to stop, they need to defeat the Russian military, and the Russian military needs to be walking back into Russia completely demolished. That's what has to happen here. So I'm still surprised the Biden administration hasn't given them the Polish MiGs that the Ukrainian military could use. And we just got to keep pushing every day to get everything we can to them. And we need to expect our allies to be doing the exact same thing.
Part of the strategy is to impose really crippling sanctions. People want them to be crippled, at least on Russia. Part of that has to do with oil and gas for Europe. We've cut it off, but obviously Europe, and particularly Germany, is much more dependent on it. Is there anything we in the United States can do in the short term to try to supply them enough so that they could cut off those supplies?
Well, we've got to boost our production. Unfortunately, the Biden administration has it out for our oil and gas industry. It's difficult to get a permit. They shut down the Keystone Pipeline. We've got to open the Keystone Pipeline. We've got to get the permits as long as it's safe, as long as our government agencies do it in a respectful manner, to where things can be drilled safely in our country, because we want to be independent. We all want to be independent as individuals. Our country has to be, and that way we can help our allies like Europe right now, where they make sure they don't long-term stay dependent on Russia. Because if Putin can defeat Ukraine, he's not going to stop there. Then he's going to be in Poland and other countries, and we're going to be we're going to have our men and women at war. So we've got to become energy independent, so we're not dependent on Russia for anything.
Senator, I want to turn to something you sent out a short time ago, which is the 11-point plan to rescue America, as you put it, a brochure really setting out 11 points. We don't have time to go through all 11 points, but part of it is fiscal responsibility. And I wonder what we can do in this country to become more fiscally responsible. You just heard the news report about the extent to which all the states were giving a lot of money because of the pandemic relief, including your home state. And we just heard about your Governor DeSantis deploying a fair amount of that money. Can't blame him. He got the money, why not spend it? But what is your reaction? Did we do the states a favor by distributing that money during the pandemic?
No. I mean, what every responsible state and local official should do is they should say, hey, I'm going to send that money back. We need to pay down this $30 trillion worth of debt. We can't waste money. When you individually get money, you don't go waste it. We got to go spend money responsibly. If there's something that we need to do to deal with the COVID crisis, I get it. But just sending money to states that they can spend basically any way they want, or to local governments, makes no sense. Somebody's going to pay that money back. Whenever the federal government spends money, somebody's taxes have to go up to pay for this. I mean, think about what's happened in our federal government. In the last 20 years, we've had a 16% increase in our population and a 300% increase in federal spending on an annual basis. That's not sustainable. That's why we have the inflation we have right now. That's why gas prices are up and food prices are up and housing prices have just skyrocketed. We have got to get control of this. We don't want to have the same problems they're having in other countries where this inflation has got completely out of control.
Inflation obviously is a very big problem across the country. I think everyone at this point admits to that, recognizes it. I want to come back to another issue in your home state of Florida, and that involves a new statute having to do with the education of young children and exposing them to things having to do with gender or sex. And obviously it's a big issue, and it's become a dividing point between, again, your state and Governor DeSantis on the one hand, and the Walt Disney Company. I used to work for them, full disclosure. I wasn't involved in any of this, but I used to work for them. I know them. Is this a sensible fight for them to be picking right now with one of the largest employers in the state?
You know, it's frustrating because I think all of us would agree that, you know, young children should not be talked about sex in school. Parents should be the ones that talk to their children about sex. So I think that it's common sense that that's not what our schools should be doing. They should be reading, writing, and arithmetic. At the same time, I think companies have got to really think about how they're getting involved. They can care about the issues, but I mean, you know, there's a lot of now woke companies that are getting involved in issues here, but then they won't do the same thing in communist China. You've got Disney as an example, which I think all of us have enjoyed going to Disney in our lifetime, but one of their last movies they shot in where they have slave labor. They got in Xinjiang, and they promoted the fact that it was shot there, and that's where the Uyghurs are in prison. So I think I'm always appreciative people. We have a right to speak and say whatever we want, but let's be consistent. If we're going to talk about things in America, let's talk about things in communist China also.
But I want to come back to that question of, is it the most important issue we have in front of us right now? I mean, we may have our own views about, as parents, about how we want our children raised. Is there evidence actually that small children are being injured by this? Was there a lot of discussion in the Florida schools about gender for second graders?
My understanding is, parents had complained about some of the things that were taught in some of the school districts. So I think that's why the bill was passed. What's frustrating is that why can't teachers and our educators focus on reading, writing, and arithmetic and not talk about ideology? And then why can't companies focus on just doing the job for their consumers? So that's what ought to happen in this country. We ought to get back to doing the basics.
So let me come back to some of the basics and come back to inflation, which you mentioned is a very big issue. Give us a sense of what you think should be done right now for inflation. Whatever money was appropriated, it was spent, including your home state did take the money and is spending it. That's sort of water under the bridge. What should be done now?
Stop spending. So we shouldn't send more money out. It's not needed. I mean, the COVID crisis is basically over. So let's stop spending money. Let's get back to living within our means. Right now, Biden's budget projects we'll take the federal debt to $45 trillion. $45 trillion in the next 10 years. I don't know how we're going to pay off the $30 trillion. And what you're already seeing what's happening to interest rates. Think of what that's going to do to mortgage rates and what that's going to do ultimately to housing prices. So we have got to get this under control, and everybody's responsible because it's our money. It's not. There's no free money. The government doesn't have it. So some business that's making a big profit off of. The only way they get any money is they have to tax us. So this money that's going to get sent out to states, the states ought to say, we don't need the money. Send it back. Send it back and let's pay down the debt. Don't waste the money. That's how we're going to get this inflation under control, by doing things like that.
Senator, I'm going to apologize to you because I never do this, but I had a viewer write in a question, actually, and I want to ask it on behalf of the viewer. And it goes back to Disney, I'm afraid, so I'm doubling back on you. I apologize.
Sure.
As you and I both know, the Disney theme park down in Orlando has special status, essentially almost a quasi-governmental entity. And there have been good reasons for that. It's gotten a lot of money for the state. Should that be under review?
You know, when I was governor, it never was an issue. I think Disney has been a responsible corporate citizen. I don't understand why they now are getting involved in some of these political issues, but so I know that my understanding is the legislature is going to look at it now. But my experience with Disney had been positive.
Yeah. Okay. Thank you. I really appreciate your indulgence on that. That is Senator Rick Scott. He's Republican of Florida. Always good to have you with us, Senator. Coming up, we go to the Space Symposium in Colorado Springs for an update on a very different kind of space race. with David Ray of SAIC. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. The 37th Space Symposium is going on right now in Colorado Springs, where, as I understand it, a lot of people involved in space get together and compare notes. We're going to go to the Space Symposium right now, and Mr. David Ray, he's Senior Vice President of the Space Business Unit at SAIC. So, David, thank you so much for being with us. First of all, tell us what you all are doing out there.
First, thank you for having me, and I really am enjoying being here. We're at the Space Symposium. It's an annual event every year where we have the largest community of space professionals from the U.S. military and DoD and federal civil agencies, as well as international partners, and large companies as well as small companies, really moving the strategic agenda forward and how we're going to make advancements both in space exploration as well as space as a part of the military and DoD ecosystem. So it's very exciting times for us.
When you talk about that strategic vision and going forward, certainly over my lifetime, it's changed a lot. It used to be all government in the United States, all government. And now we see so much private. We see SpaceX launches. We cover them all the time right here on Bloomberg. A lot of privatization of space. What are the biggest developments we're seeing right now with respect to space?
I think you're seeing three main pillars that are starting to merge and integrate. The first is how space plays its role in the DoD and military ecosystem, how it also, from a federal civil standpoint, with NASA, drives the acceleration of space exploration. The second pillar is focused on commercial satellite operators. So think of communication satellites that make the digital economy work, that increase and enable our ability around internet and TV. And then the third piece, which is newer than the first two, is really the notion of space travel. All those are integrated, and we have to really be able to go build an infrastructure and understand how we're going to manage not only the traffic from a data perspective, but also the assets that live in space so that we can do all three efficiently and effective for our partner.
Well, let's talk about the stuff that's up there in space, because this is one thing that really grabbed me as I was reading for this, and you've been involved in this. How do we keep track of everything that's up there? I see 5,600 payloads, 18,000 objects, and 20,000 bits of debris. You've got something called Space Track to sort of keep track of it all. Mr. Ray, can you hear me?
Absolutely. Yes, I can. Can you hear me?
Yep.
Absolutely. There's a continuum of space traffic management. Some call it a space domain awareness. And the first step is knowing what's out there. Spacetrack.org is a system that we use where, as commercial companies and government entities launch things and objects into space, they register them with our system so that we at least know what's there. That is the first step in really being able to have effective space traffic management. I will say that's just the first piece. The pieces that we're moving towards now are also understanding how fast they're moving, how big they are, and then how do we navigate through that debris as we start to launch more satellites, as we start to launch humans into space when you think about space leisure travel, and also as we launch satellites to increase communications worldwide. Just a point of note, from 1999 to 2019, the International Space Station had to maneuver about 25 times to avoid debris in space. So that's a little more than 2 times a year. In 2020 alone, it had to maneuver 3. So we're expecting to see that increase because the amount of objects in space are going to increase. So it's becoming more imperative now that we have to understand what's up there, how we manage it, and how we navigate it so that we can be safe and advance our agenda with respect to space exploration.
I have a very basic understanding of this, but you have satellites, you have space stations, things like that, things you want up there. It seems there's an awful lot of things called debris or failed satellites and things. Are there any plans to go up and clean up part of space?
Absolutely. You know, just like here on Earth, when we're driving down the street, we have to build our roads. We have to paint our roads. We have to have gas stations so that we can continue to move our cars down the road. We have to have maintenance facilities to be able to make sure that they're up and running. We have to build that infrastructure in space. There are efforts underway to look at and understand how we can refuel satellites in space, because oftentimes satellites just stay up once they run out of gas, and so they don't have any more useful life after a certain time. We want to be able to reuse assets. And so really building the highways and byways in space, just like we have in the air with aircraft, just like we have on the road with cars, are really going to fuel, how we effectively manage it and how we effectively get the best and long-standing endurance out of the assets that we put up there.
Okay, really appreciate you being with us today, Mr. Ray. That's David Ray, Senior Vice President of the Space Business Unit at SAIC. Coming up, we've got a hot primary race for the Republican nomination for Senate out in Pennsylvania, and one of the candidates, somebody well known to Bloomberg, the former head of Bridgewater. We're going to talk about Dave McCormick next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. There's a barn burner of a primary building for the Republican nomination in the Pennsylvania Senate race, with several candidates and two with particularly strong name recognition. Mehmet Oz, strong name recognition with the afternoon TV viewing public, and Dave McCormick, name recognition with, let's be frank, Bloomberg audience, because he used to run Bridgewater. Joshua Green, national correspondent for Bloomberg Businessweek, has written a big take on McCormick, and we welcome him now. So, Josh, terrific piece of reportage here. So give us your take on what Dave McCormick is doing to try to get that nomination.
Well, basically, I think this is the most interesting and important Senate race in the country because you have Dave McCormick, the former CEO of Bridgewater, world's biggest hedge fund, running against TV personality Dr. Oz. So I went and embedded with both of them for a little while campaigning. And what's striking to people about David McCormick is that he has transformed almost overnight from a kind of Davos-friendly Wall Street type Republican to, an anti-immigration, Trump acolyte, MAGA figure. It's been a quicker and more rapid transition politically than anything I've ever seen before. But the upshot is that it's winning and that both candidates are running this kind of America First race because they're trying to tout their allegiance to Donald Trump. And that really is still the currency that Republican politicians need to have in a Republican primary.
So, Josh, let me ask you about the transformation part of it, because full disclosure, your piece, which is very compelling, starts with an event that I was at. It was celebrating Dave McCormick's marriage to Dina Powell of Goldman Sachs, and Ray Dalio gave a speech. I was there, and a lot of people were. But I've known Dave for a while, and I've never had any illusion that he's not a conservative. I mean, this was not some liberal that's moved all the way over. I'm just not sure he really addressed a lot of those issues before because he wasn't called upon to.
Yeah, well, in speaking to his former Bridgewater colleagues, I think the shock was more stylistic. Not that they were surprised that he was a Republican. Of course, the CEO of a big hedge fund is likely to be a Republican. But he transformed so quickly. I describe it as Clark Kent in a phone booth, from wearing a suit to wearing camouflage in railing against woke liberalism. This is a guy that won a diversity and inclusion award at Bridgewater just last fall. The real thing that got to me, though, is that McCormick has become sort of the favorite of Breitbart News, the notorious right-wing website. I'm sure you remember, David, 5 years ago, Robert Mercer got basically drummed out of Renaissance technology for his associations with Breitbart. But one of the interesting things is that McCormick really hasn't. Nobody on Wall Street has batted an eye. So I think that goes a long way toward explaining or showing how much the business world has embraced Trump and Trumpism. And the fact that a guy as credentialed and serious as McCormick is willing to kind of bend the knee to Trump in this way shows that he remains the dominant figure in the Republican Party.
Well, let me just ask about that, bending the knee to Trump. How much of this is bending the knee, as you put it, to the person of Donald J. Trump, and how much of it is accepting some of Trump's positions? Because a lot of people I talk to on Wall Street think Trump had some issues very much right with respect to China. By the way, with respect to taking natural gas for Germany from Nord Stream 2, that you can divorce, can't you, the person of Trump from some of the positions he took?
Possibly, yeah. I mean, I think the interesting thing with McCormick is, Bridgewater and Ray Dalio are famous for their investments in China. And that's something that McCormick, as CEO, oversaw for years. One of the rapid transformation points I was talking about in the piece is that almost overnight, He reinvented himself as this anti-China figure because, again, as you said, that's something that appeals to Donald Trump and Donald Trump voters. And I think those are the people he's trying to win over as he competes with Dr. Oz.
Yeah, it's a fascinating race. So, as I say, two fairly charismatic people with a lot of name recognition. It's going to be a really great race to follow. Thank you so much for being with us, Josh. Great piece, as I said. He's national correspondent for Bloomberg Business Week. Check out the Balance of Power on newsletter on the terminal and online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to Dr. Anthony Fauci, director of the National Institute for Allergy and Infectious Diseases. We're going to ask him, among other things, do we need that fourth booster shot? We already have 3. And what's coming up in the fall? This is Balance of Power on Bloomberg Television and Radio.